I guess.
Hello everybody, welcome to a new episode of our weekly hangout about Bitcoin and other decentralized value systems. My name is Paul Buitink and my co-host today is Tim Pastoor of Identify. Our guest today has been into cryptocurrencies since the time when most of the Bitcoiners were still figuring out how to walk. Our guest is a financial cryptographer, inventor of the Ricardian contract and the Ricardo transaction used in systems like Common Accord. He used to be a performing artist in a previous life. Some people even think he's Satoshi. I'm talking, of course, about Ian Grigg. Ian, welcome. It's an honor.
Hello there.
So, before we talk about the technical stuff, first of all, you say on Twitter that you used to be a performing artist. What's that all about? When and where did you perform?
Oh, there was a period of my life where I was in Vienna and part of an artist's community there, and one of the things that my girlfriend at the time was into was a thing called video projection, or feedback projection, and also visual art. So she taught us these techniques to use projectors to place imagery on walls, which were done manually. So using overhead projectors and 16mm film projectors and slide projectors and so forth. So we had a little group that would prepare those and place them up against walls, move them around and do it to music, and basically do a visual dance. We performed across Austria, also Mexico, some other performances. It was an interesting time. It was very different.
It sounds very exciting. Do you miss that sometimes?
Yes, it's a very different sort of thing being in the art world. It's it's more like being part of the rock band. You travel around, you do lots of work, you get up, you do your performance, and then everybody relaxes and beers, and it's an interesting life.
Well, financial cryptography, of course, is very interesting as well. I'm going to give the mic to my good friend Tim, because he has come up with a lot of very interesting questions he's going to ask you. So Tim, go for it.
First of all, thank you, Ian, for joining us in the show. I'm very honored to have someone with as much experience as you have in the field of both cryptography and cryptocurrencies. First of all, I was curious, apart from the things you are probably known for the most, such as the 7 layers of financial cryptography. Paul already mentioned the Ricardian contract, the digital version, I should say, probably, because the idea of the Ricardian contract goes back to the 19th century, if I'm correct. Also, you've been working on M-Pesa. You've been working on cryptocurrencies in Africa, if I'm correct. And you've been doing a lot of interesting stuff over the last 20 years. So could you maybe tell us a bit about how you became from being a performance artist to working on cryptography?
Yes, a bit of a strange migration, but actually that was an interjourn in the middle. That was just a sort of hobby thing that we were doing on the side at the time. It's a long journey. I'm not sure I can summarize 20 years in 5 minutes, but I suppose very quickly we were doing basic client-server style cryptocurrencies from the mid-90s on to the mid-2000s. This was basically an iterative process of moving it through a various number of generations. We got to the 3rd generation there. But a couple of big things happened in the early 2000s which really screwed it up for us. The first thing that happened was that the dot-com boom ended, so a lot of the capital disappeared out of the industry. The second thing was 9/11, and 9/11 caused the Americans to flip, and so consequently America as a bureaucracy was highly positive towards digital currencies up until the time of 9/11, and then they went completely negative. So as you can see now, there's still that negative environment. And the third thing that happened, of course, was that I and the egold group got into litigation and had our day in court and all that sort of thing. So that really took the shine off it. So somewhere around the mid-2000s, I bounced out of the direct cryptocurrency business into various other areas, which probably the highlight of that was CA Cert, which involved a lot of certification authority work, and it really sorted out the notion of identities and reputation and how you build big organizations where people can actually trust each other. Then I, bounced around a bit and ended up in Kenya doing work with social savings, and there we really got to see the cryptocurrency stuff shine, because the whole notion of triple entry added a huge amount to their situation. But also it allowed me to take C.A. Cert's ideas for reputation and identity to full fruition in a real working value trial, and that's something that's still very, very way advanced. It's way advanced for the rest of the world. It's actually the best thing out there. So, and then after Kenya, I came back to Europe, to the north of Europe, to London, where I am at the moment. And now I'm working on a bunch of other things, which are all in the space.
All right. So, you said that it started somewhere in the mid-90s. So, around 2009, Bitcoin arrived. Did you bump into that immediately, or did it take you a while before you saw it? Because I could imagine that you would be one of the first persons to see this coming along and thinking, "Wow, hey, this is great." Maybe even approach it with a bit of skepticism, because this had been tried quite a few times. So,
yes.
Could you maybe tell us a little bit about that?
Yeah, I was on the cryptography group when Satoshi Nakamoto announced his designs, and he worked through it with Hal Finney and also James Donald. James Donald took the part of devil's advocate, and I was happy to let him do that, because I at the time thought that actually the proof of work thing was unsustainable and therefore could not really be a suitable base, although I admired the work. And at the time I thought, unless you can conquer that situation, it's not really a starter, is what I thought at the time. Mm-hmm. So it did actually spend maybe 2 or 3 months bouncing around on the cryptography group, and then it all went silent, so it wasn't for another 6 months or so. After 6 months or so, I kept hearing these references to it over and over and over again, and eventually I thought, well, I better have a look and see where it had gone. So yes, I was there at the start and basically ignored it.
Okay, cool. Yeah, because you, from the beginning on, like you said, you were a bit skeptic maybe. I believe you also wrote about that the system would collapse on itself because of botnets. Is that correct, first of all, and how do you see that right now?
Yes, so that particular article was based on the energy consumption argument, which really does dominate the incentives and dominates the economics. And we were looking at it from the position of the economics to try and predict where it would go. And basically, it does occur that the problem with the economic situation is that there is a bit of a flaw in the arrangement. If you're burning all that energy to create the value in order to keep the incentive mechanism going, then the cost of the energy becomes key. And there's an obvious problem with that, in that you can steal the energy. And I theorized at the time that the obvious player to steal energy would be the botnets, and therefore I said, the botnets will basically come in and take over. What happened was not that. Before the botnets could get to grips with it, and yes, there was some evidence of botnets stealing energy, but before that happened, the GPUs took over, and then after the GPUs taking over, the ASICs took over. Mm-hmm. However, we are seeing an echo of this now. What is happening is that a lot of mining has... first, there was mining that drifted across to places like Iceland, where the power was cheap and the cooling was cheap. But now it's drifted across to China. And there is some suspicion, there is a claim, if you like, that what is going on there is that the big Chinese rigs have done a deal, shall we say, under-the-covers deal with power stations. And effectively what they are doing is using corrupt deals to acquire power on the cheap. So in effect, they're stealing the power. Now, what is the truth of this? I don't know. How do we find out? I don't know. But that has been a claim that's out there, and I actually think, it's certainly a danger we need to be wise to.
All right. Yeah, sounds fair enough. Yeah, that's probably a hard one to prove, especially since it's about China. There's only one person to ask for the books. So it's where it comes to auditing, it's probably a big issue. and not
Yes.
only for mining and power, but also if you look at exchanges, etc. Do you agree?
Yes, and this is one of those other essays that I wrote about this area, which then went on to be recycled into another essay. Mt. Gox had the obvious problem that it only had one person managing all the accounts, all the books, and we know from not hundreds of years experience, but thousands of years of experience, that if you have one person managing the books, it will eventually go wrong. You do need a professional class of managers in there. You need separation of powers. You need accounts doing this and other people controlling accounts doing that. You need a proper arrangement. And if you're saying that there's only one person managing the books for those mining rigs in various places, then eventually it's going to have a problem.
Yeah. So when looking at blockchain as a technology, looking at where it has come from a few years ago only, and where we are right now, where we see all different sorts of spin-offs, which are actually databases, but in a distributed fashion, also calling themselves blockchains to oversimplify it a bit. Where do you see it going in the next few years, and where do you specifically maybe I should rephrase this. Where would you like to see blockchain technology evolve into, and what don't you want to see it evolve it into? Do you see anything that could be potentially scary?
Well, I guess to answer in reverse order, scary, not especially. I don't see that any of these technologies necessarily will gain, shall we say, a momentum that creates such drama that it will cause changes of existing states, existing governance, and so forth. If we look at Bitcoin itself now, it has actually grown to the point where it's approximately stabilized around where it is now. And the reason for that is it's basically consumed, it's found its population of people. At this point, we now enter a waiting period where we're now going to build out more infrastructure. And that infrastructure has to be built before we can move to the next level. So my prediction, if you like, you go out on a limb and you make these predictions on national TV, the price is going to more or less stabilize for a while until the next set of innovations comes out and starts to get on stream and they start to interact with each other. And that might take a year. It might take 6 months. It might take 2 years. And the same thing is going to happen. If you like, my favorite example is Open Bazaar. It's a great idea. It's going to get up there and start doing some sales and so forth. But is it going to be used for drug sales and for scary stuff and, ISIS terrorist sales or AK-47s? No, not really, because it is traceable. It's fundamentally traceable, and there's enough things going on such that if a serious, if you like, authority, a police force wants to get in there and start chasing it, they can. They can do that. So what's going to happen is this system will get up to the point where it can. It will have its audience, its group of people working, and that will be great. But it won't ever, shall we say, take over the world. I mean, nothing takes over the world. Even if you look at Facebook, it hasn't taken over the world. It's just got its particular group of people, and they all cooperate, but they also cooperate in other places as well. So I don't see that there's anything to be scared of.
Yeah. So when you name these infrastructures, do you see certain issues that have to be solved primarily before we will see mass adoption? So for example, user experience. So the usability of Bitcoin, it's mostly for techies right now. If I look back at 1995, you had to be a computer scientist in order to install a modem in Windows 95. And that was probably the easy version of installing a modem back then. But nowadays, you just take your phone out of your pocket, you push the button, and you're on the internet. So do you see a sort-like issue that needs to be solved before Bitcoin will get to the next level, as you said?
Yes. I think there are several things that are needed before that happens. A user interface is one of them. Security is another. I think people talk about multi-sig and off-client wallets and things like that, cold storage. But I think that's very technically oriented. This has not got to the point where users should feel comfortable with this. They need a much more clean and understandable interface than having to deal with that technology. So that's one area. But I think there are also some other things that are needed. And you can see these elements out there in the world. And I think it comes down to approximately three. We need a file store mechanism which sits alongside and works to approximately the same degree. And whether it's one of the ones that are out there or not, I don't know. We need a mechanism for communication between parties, and that, in essence, we need a chat or IM message system. And we know how to build these things, but what we don't know is how to integrate them seamlessly with all the other technology. Well, I have to be cautious there, but anyway. And the third thing we need is something that I would call an identity layer. And you and I have talked about this quite a lot. It is not identity as far as the rest of the world sees it. It's a complicated mix of new technologies, new arrangements, which is going to eventually solve the problem of how do we communicate to each other and know that we're talking to the same person as last week, the same person as last year, the same company, etc., such that we can trust each other and do a deal. And that particular question is an open question yet. It's still not, if you like, laid out there in the various groups that are trying to do these things. There's still a very big element of discovery. So until we get those three things alongside Bitcoin, I think the move to the next step is going to be somewhat slow.
So do you think that there's an economic incentive in some way to get to this next level, to create these kind of technologies in order to take Bitcoin or other cryptocurrencies, for that matter, to the next level? Because if Bitcoin itself won't be used, a lot of money still has been invested in the technology itself. A lot of people still have the urge to take it to the next level. So once people realize that, for example, like you said, trust is a missing layer, or truly decentralized peer-to-peer communication, do you think that these companies will also start investing in this kind of technologies?
The economic incentive to build the various components is a big issue, and yes, I don't know the answer to that. The amounts of value that I see are primarily coming from venture capital groups out of Silicon Valley, and for the most part they are oriented towards trying to do a land grab, trying to grab a certain piece of territory. There have been a few bright spots where people are thinking a bit broader. So, for example, Reid Hoffman invested in Blockstream with a bunch of others, but it was basically Reid Hoffman. And he said, yeah, well, we're going to do it right. And it's instructive that Reid Hoffman's venture capital firm did not invest. It was Reid Hoffman's personal foundation that invested in Blockstream. And this is kind of an indication that he's prepared to go the long distance, put down a lot of money, and it was a lot of money, without any particular clear vision as to where it was going, in order to build out the infrastructure. And if you look at what Blockstream have been doing, it doesn't show any payoff. All of those things that have been talked about, all of those technologies, all of those fixes, all of those new ideas, none of them show a payoff. They're all about building out the infrastructure so that we can get to the next level. So that's actually a positive sign for the community. And then there's other things, such as there's quite a few groups which are doing things like what is emerging now is social blockchain. So there's a bunch of groups that are working on different ideas to get various social ideas built out, and these guys are looking at the longer run as well. And there's also there's a group in London which are working on a prize for that sort of thing. I'm not sure how far they've got yet, but they're talking in terms of putting millions of euros into the nature of social blockchain.
Okay, so when we look at these kind of infrastructures, and we take banks for example, they have a lot of legacy systems, but at the same time they also have a lot of infrastructures already in place. They know a lot about securing these kind of infrastructures. While they may not be as secure as blockchain, for example, but still they have a lot of experience in this field, and they have a lot of expertise in this field. At the same time, you see small companies, small startups coming along, all these FinTech startups who are just taking a bit of their business away, just a little bit at a time. So where do you see the future of banks? Do you think they will decartelize? Do you think they will evolve into new sorts of banks, or do you think they will disappear in total?
Yeah, it's an ongoing debate, isn't it? Depends on whether you're talking about banks or banking. Let's talk about banking first.
Okay.
Banking is a little tricky. It's a subtle concept, but it's actually quite definable. It's the borrowing of money from the public and the lending of money to the public. Now, the borrowing is done at demand, which means you can pay it back right away. You have to pay it back right away if it's demanded. The lending out to the public is done at term, which means you can't get it back. So there's an obvious mismatch. It's called the term mismatch, and this is banking. If anybody else did it, it would be fraud. You'd be borrowing money from one group and then giving it to another for a long time. You can't pay back the first group. So you're actually entering into a fraudulent contract. You know you can't do it. So the banking charter, if you like, is the way we get around that problem in order to raise these savings levels and move them to some distant place where it needs fantastic amounts of capital. That's banking. Mm-hmm. The big picture, however, is securitization. Now, the problem with finance was you needed somebody to sit in the middle, Uber-like, mm-hmm. to bring the deposits in and send them out to the loans. But securitization has opened the bottle and the genie has come out. With securitization, you can now take all these loans, slice them up into mini portions of loans as a financial instrument, and then sell them onto the market. So the market has changed. The market for banking has changed such that banking is now no longer holding on to those loans for term, for 30 years or whatever. You don't have the mortgages sitting in your bank for 30 years. You've securitized them and sold them off, which means you're no longer doing banking, because what you've done is you've taken deposits, wrapped them up into mortgages, created the loans, and then sold them off to other investors. Securitization has turned off banking. It's basically turned it into markets. So you have this, if you like, this spectrum between banking and markets. If you've got markets and they're efficient, you don't need banking. Mm-hmm. And this change has happened over the last 30 or 40 years. Unfortunately, the genie is now out of the bottle. We cannot put that genie back in the bottle. So banks will no longer be doing banking, or are no longer doing banking, and are moving away. Mm-hmm. That's one big thing. The other big thing is these are huge institutions, and they have huge amounts of capital and money and value and cash flow, and they have huge bonuses and huge staff. And all of those people will want to keep doing the same thing that they're doing before. So these huge institutions are basically moving away from banking into markets, and they will find something. They will take over various properties. So it used to be the case that banks, for example, were not allowed to own productive businesses. As far 20 years ago, it just wasn't allowed. Mm-hmm. There was banking, and then there was business, and you weren't allowed to mix them. Yeah, but exactly. Now banks are allowed to own productive business. In fact, sometimes they're forced to own productive business. So you'll find that banks will start to move more and more seriously into being business owners and so forth. So that's one part of your question. Then coming back to the next question, FinTech. Are these FinTech startups going to be nibbling away at the business and taking it away? No, not at all. Every one of these FinTech startups has at the back of their mind the goal of being bought out by a bank. They are starting up to do some process which is better, and they wait for the phone call from the bank such that they can be bought out and absorbed into the bank. So if you like, the bank is not seeing its business nibbled away at, it's seeing its capital nibbled away at. It has to put its capital down to buy its business back again.
That's an interesting way of looking at it. Yeah. So Paul already mentioned something. I thought it was pretty interesting one, but I'm not sure if you like me to repeat it about that you were working in crypto when a lot of us still had to learn how to walk. It's that sort of like thing last week to Dave Birch, and I'm not sure if he really appreciated it. I think he laughed about it, so I think he didn't really mind. But I mean it in a good way, because you've been working on cryptography, on cryptocurrencies for a while. As you've also proven over the last 25 minutes or so, you are well credentialed, you are well read into the whole topic. And a lot of people are, especially the folks my age, Paul's age, our generation, are now flooding into the whole cryptocurrency scene, and a lot of them see it as something new, while it actually is a movement that has evolved over the last several decades. Is there any kind of advice you would like to give us, guys like our generation, or even the people at the FinTech startups who might be bought up by banks in the long run, on what to do and what not to do?
Yeah, that's a really difficult one, because the answer is a whole lot or nothing. There's a lot of reading you can do about the history, and in fact, there's this paper I wrote a long time ago called Financial Cryptography in 7 Layers, and literally what I was trying to say in that paper was that there are these 7 different disciplines involved in a successful business, and therefore you, the startup owner, have to know about these 7 disciplines and learn about them and know something about them. So if you look into, for example, Satoshi Nakamoto stuff and so forth, it's very clear that he understands economics, he understands accounting, he understands rights management and things like that. He understands governance, he's built an incentive system, etc., etc. So people that have been successful at creating these systems have a much broader knowledge than the pure technically oriented people that have just sort of powered on and said, well, gee, we'll solve everything with crypto. So it's a case whereby you've kind of got to read it much more broadly. But the bad side is that that journey never really ends. So in a sense, it's almost as though the sacrifice is too high. And I can tell you, when it gets to things like governance, when you're trying to learn how classical governance systems separate out pots of money and keep them protected, it's pretty dull. It's pretty boring stuff. So maybe you're just better off reversing back into the old crypto thing and saying, well, maybe there's a cryptographic solution to this, or maybe I can just wing it and wait until somebody else buys my company out and employs some accountants to solve the problem. So, yeah, read lots or just power on, one of the two.
Okay. So, but what you said is that, correct me if I'm wrong, but what you said is that if you want to come up with something great, it's better to be a generalist than to really focus on one thing?
Yeah, so this is a difficult one, isn't it? I think you have to be a bit of both. I think in the early stages of your career, if you're 20 years old or 22 years old, you really do want to specialize in something. And the reason for that is that you can always lean on it. You can always go back to it. You can always think of the world from that point of view. Whereas if you're too much of a generalist without being a specialist at the back of your mind, when it comes to getting into trouble, when you come across a very complicated problem, you end up skating over the surface. You can't ever go deep. So in my trade, I was a systems programmer. I used to do a lot of C and Unix and all that sort of stuff. So whenever I get into trouble, I go back and I kind of dig into the source code and read the system calls and figure out the networking aspects and so forth. And that gives me a grounding, and from that I can start to build up. Without that, I notice that a lot of people who do know an awful lot of stuff, but because they haven't got that specialization, they tend to be groundless, and their concepts tend to sort of drift like clouds further away.
Yeah. All right. We're 30 minutes into the show right now, so I want to give the word back to Paul. I think he probably has 1 or 2 more questions.
Yeah, it's very interesting, the last thing that Ian said. I think it's probably good advice to anyone to at least have some basic coding skills, right? Before before getting into crypto.
Before getting into crypto, absolutely, yeah. In fact, if you look at all the very good crypto plumbers out there, we call them crypto plumbers. They are by career, they are programmers. All of the greats have been programmers that have then started to learn cryptography starting out as a hobby and then moving into a career. So if you look at Hal Finney and Zuko and people like that, they've been deep programmers, and then gradually they've got more and more into the crypto. Same goes for Adam Back.
Yeah, I see quite a few references on your site to Austrian school economists. Do you consider yourself an Austrian economist as well, or is that the school of thought that you're most comfortable with from an economics point of view?
From the economics perspective, yes. Austrian economics is kind of how I found myself, having read quite a lot. Yeah.
All the way until like Rothbard, or so are you like an anarchist? Or?
No, I'm not really an anarchist. I'm more into things like Mises and Hayek and so forth. Rothbard himself, I've never actually read. So if you like, there are limits to what I can read as well.
Interesting, yeah. I got out like after I read Mises, I also started reading Rothbard, like it's a sort of a logical next step, and then before you know it, at some point you consider yourself a full anarchist after reading all those books. Last question I had before we wrap up. I saw this very interesting video, quite an old one, I think like 9 years ago or so, where you talked about a flower currency.
Yes,
that was part of the digital currency system that was in place back then. Is that currency system still working, and is it possible for us to issue assets there and to create our own currencies like flower currencies or anything else?
Oh, you're talking about the digital issuance of flowers or the physical issuance?
Well, I think if you issue them digitally and someone wants to get hold of them, you have to issue them physically as well, right?
It was an experiment in trying to relate the two together. That's right. Yes. The digital system hasn't been running for a long time, but in theory, anybody could write a Ricardian contract and put it up on a server, one of my servers, and just have those pressed flowers there. The physical system was basically, if you like, an art performance. We basically went through the process and created all these physical tokens based on the pressed flowers, and then everybody who participated took away their pressed flowers and used them as local currency.
Oh, nice.
So yes, I imagine there's still some circulating in Austria and I found them. I took a whole bunch of them back to London and handed them out to at various business meetings, and I found that it didn't really work at all with the males. But with the women, it was a real killer. It was wonderful. I made a lot of women friends that way.
Women like money and flowers, so it's two birds with one stone, right?
That's right, absolutely.
Well, maybe in the future they deserve a place in the money museum next to the Yap stones, your flower currency.
Could be.
Well, it was very interesting, Ian, to talk to you, and thanks, Tim, also for all the good questions. Maybe you have one final question, Tim, or maybe Ian, you wanna have just like a closing remark, or how do you see things?
I'll listen for Tim's question.
Well, there's one more that pops up in mind. It's not really related to digital currencies, but since we're talking about flowers and currencies anyway, I think we can drift off a little bit. What do you think of complementary currencies such as the Brixton pound, for example?
Yes. The theory is really quite enticing. If you're going through an economic depression or recession and the cash has been sucked out of the economy, you have all these people sitting around doing nothing. The baker, the butcher, the hairdresser, all of these people have work that they could be doing, but they don't have the cash. So if you just create the cash with the Brixton pound or whatever local currency you can think of, and give them all some units, and then they all start circulating, then at least they get those jobs done. And this
in Greece, right? In Greece now, right? That's definitely needed in Greece as well, and they talk about some of these local types.
So absolutely. So these things pop up like mushrooms as soon as recession hits, and we expect it's going to take off in Greece. Yeah. However, they tend only to work up to a certain number. And that number is like the village or the town. It works up to the point where you can basically rely on local trust, such that nobody's cheating. But as soon as you get to the point where, for example, multiple towns are communicating with each other with, say, different currencies, people start attacking the system, basically so they can steal value.
Yeah.
So we saw this in South America. They would get to the point where they would have 1,000 people holding these things, and then the forgers would move in and start stealing value. And once a certain level of forgery had entered into the system, and people got scared of the fact that they were dealing with forgeries, the whole thing would collapse.
But that's where blockchains can play a role, of course, to avoid forgery from happening.
Well, and that's a theory, yes. But how do you then get these local currencies to work in a blockchain setting? The only answer to that is if they've all got smartphones. And we're not quite there yet. We might be there soon. It kind of depends. What we haven't got, for example, certainly what we haven't got with the blockchain is the ability to do Ricardian contract style issuances freely. What is there is open assets and things like that. But they're clunky. They're slaved on other Bitcoin units. And if you look at what's going on in the blockchain now, there's this whole problem of transactions being flooded into the system. So a lot of transactions are getting rejected, and there's now a delay of up to 6 hours or so before you get a transaction confirmation. I don't really follow the details of what's going on. But that's the problem you face when you've got one unit on top of another unit, and you're trying to use one accounting system for one unit to account for another unit. So open assets has that problem. Until you get a blockchain-like sidechains, which is set out separately purely for the purpose, or dominantly for the purpose of handling assets with something like a Ricardian contract, then you are going to have that problem. So we're not quite there yet with blockchain.
So even though we have a trustless system now, such as Bitcoin itself, we still have the issue with trust.
So what is trust? I mean, you can now do a transaction between somebody here, say, I can do a transaction with you, and I've just met you tonight, and that will work, and we don't need any trust. But am I going to send you my life savings? That's a trust question too, and Bitcoin doesn't solve that question. So what is trust, and why are we saying that Bitcoin is trustless? I actually need a lot more trust to do trading with you than Bitcoin is supplying. So there's still open questions there.
Yeah, I agree totally, but I'm too biased on this one.
Yeah. Before we go down through that rabbit hole, let's wrap up. Any closing remarks from your side, Ian?
Oh, just to carry on with that trust question, you know, if you are really a die-hard believer in that, I want you to send you your life savings to me now because you trust me. In the sense that we really can get into this debate, and there are many things that are needed before Bitcoin can support that sort of thing. And I'll give you, if you like, the pointer to where I think that is going to happen and emerge, and it's with CA Cert. They have built the assurance system to allow enough trust to circulate amongst people such that deals can be done. And this is unfortunately kind of a lost innovation because most people see CA Cert as being a failed CA, which to some extent it is, but it's a very successful trust system. It's probably the most successful trust system we've ever seen. It's the only certification authority you can actually talk about trust and know what it means. Yeah. And so consequently, you know, we will find something like that emerging with Bitcoin. We don't know what it is yet, but to answer your trust question, there are more things that have to be done, and look there.
Right. And where can people find more or read more about some of these things, like you said, like CA Search and of course your own work? Where can people find it?
Oh, well, there's you can start reading the 1,500 articles on financialcryptography.com, but do avoid HTTPS because it's a CA Cert certificate and it blows up every time the browser sees it. CA Cert has got a big wiki. The main thing to do there would be to look at the assurance process. If you search on assurance and CA Cert, you'll find lots of interesting stuff there. Or hunt around and find an assurer and say, look, tell me what it's about. Come on, tell me everything and assure me while you're at it.
Yeah. And what is the website of the CA Cert?
CACert.org.
.org. Okay. Great. Okay. Well, thanks so much, Ian, and that was very interesting. And I think we've learned a lot, and our viewers as well. So let's do it again, possibly in the future. And have a good evening.
All right.
Thank you very much.
Good night.
Good night.
Bye.